This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Top oil exporter Saudi Arabia unexpectedly kept March price of its flagship Arab light crude to Asia unchanged at a more than two-year low. An Aramco statement showed on Tuesday, as the OPEC leader strives to maintain its market share. Saudi Aramco set the official selling price, OSP, for March loading Arab light to Asia at $1.50 a barrel over the Oman-Dubai average, same level as the previous month. The state oil giant made its biggest cut on the OSP in 13 months for February cargoes to a 27-month low amid competition from rival suppliers.
Oil prices were little moved in early trading on Tuesday, as market participants assessed a visit to the Middle East by U.S. Secretary of State Antony Blinken to discuss a ceasefire offer in the region. Blinken met Saudi Arabia's de facto ruler on Monday. Palestinians hope the visit will clinch a truce before a threatened Israeli assault on Rafah, a border city where about half the Gaza Strip population is sheltering. The ceasefire offer, delivered to Hamas last week by Qatari and Egyptian mediators, awaits a reply from militants who say they want more guarantees it will bring an end to the 4-month-old war.
Moving on to the top news in the energy sector.
Germany's government has agreed plans to subsidise gas power plants that can switch to hydrogen, the Economy Ministry said on Monday, with a price tag of $17 billion in subsidies as part of efforts to supplement intermittent renewable energy and speed up the transition to low-carbon generation. The announcement follows pressure from the industry, impatient for detail after the government had promised the strategy last year as Germany counts on hydrogen to help the country move away from gas and coal. The tender process for the 4 gas plants with total capacity of up to 10 gigawatts, GW, would take place soon, the ministry said, without specifying when.
European Union policymakers hope to agree new rules on Tuesday to promote domestic production of equipment for solar and wind power, fuel cells and other clean technologies to ensure its industry can compete with Chinese and U.S. competitors. The bloc aims to set a 2030 target of producing 40% of the products it needs to reduce greenhouse gas emissions. These will cover renewable energy, battery storage, heat pumps, electrolyzers, biogas, carbon capture and electricity grids. Europe is increasingly relying on China, which is forecast to have 80% of global manufacturing capacity and solar power, for example. It also has concerns that the $369 billion of green subsidies in the U.S. Inflation Reduction Act will entice European producers to relocate. Next, we have the top news in metal markets. The volume of aluminium product exported by China to the European Union, which was covered by the bloc's carbon border tariff, fell 30% in 2023, the China Non-Ferrous Metals Industry Association, CNIA, said on Monday. The EU launched the first phase of the Carbon Border Adjustment Mechanism, CBAM, in October, as it tries to stop more polluting foreign products from undermining its green transition. While the bloc will not begin collecting any CO2 emission charges at the border until 2026, EU importers have to report the greenhouse gas emissions embedded during the production of the targeted imported products, including energy-intensive steel, cement and aluminium.
Copper prices hit 2-week lows on Monday as the dollar climbed, and pessimism about demand in top consumer China was reinforced by a renewed focus on the country's troubled property sector. Benchmark copper on the London Metal Exchange, LME, was down 1.3% at $8,374 a metric ton by 17:36 GMT, having earlier touched its lowest since January 23 at $8,357. Traders said copper's losses accelerated after the New York Open as robust data from the services sector in the United States dampened expectations for aggressive rate cuts by the Federal Reserve, pushing up the dollar.
We will now look at the top news in the agricultural sector.
Russian wheat export prices continued to decline last week, still under pressure from oversupply, while shipments rose to a 4-month high after better weather at ports, analysts said. The price of 12.5% protein Russian wheat scheduled for free on board (FOB) delivery in March was $228 a metric ton, down $7 from the previous week, the IKAR Agriculture Consultancy reported. The Sovcon Agriculture Consultancy pegged the same class of wheat at $232.238 a ton FOB, compared with $238.242 a week ago. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.